This $2 trillion valuation coming to the market, raising $17 billion in the IPO. That's taken away from cryptocurrency attention. The market is pricing in higher inflation. They're pricing in a less conviction that the Fed is going to be able to slow this down. Is Tom Lee going to hodl? Or is he going to also rethink his thesis? When he tweets about crypto and Bitcoin, it's just like, oh, please stop.
The first thing I wanted to discuss is the upcoming SpaceX IPO, which is supposedly going to be one of the largest in history. The interesting thing is that SpaceX holds about 18.7 thousand Bitcoins. The IPO could make SpaceX the top diversified business holding Bitcoin. So why do you think this is so significant for Bitcoin holders?
Well, so I think there's two components here, and one is in terms of on the balance sheet, as you allude to. It's definitely a big leap forward for Bitcoin in the fact that this is the first $1 trillion company when it's listed. You mentioned there it'll be worth $2 trillion in terms of potentially in market cap that actually holds Bitcoin on its balance sheet as an asset. So that obviously sets a precedent for institutional treasury allocation. And it basically also, if you think about it, when SpaceX launches, I don't know if you guys know, but there'll also be a change to NASDAQ index inclusion in terms of fast track inclusion for SpaceX within these indexes that is tracked, which means therefore that all these passive accumulating institutions that buy the NASDAQ to try to track the NASDAQ will get exposure to a company that has got Bitcoin on its balance sheet. So that itself is a big leap as well. It signifies that Bitcoin is a compatible hard asset, so in a capital intensive business. So it's not just, for example, in the past we had some tech-focused companies like Tesla and MicroStrategy that have held Bitcoin on their balance sheet. Here, it's a manufacturer of space equipment that has now got Bitcoin on its balance sheet. So it expands beyond just a tech-native framing for Bitcoin for institutional, for corporate accumulation. Potentially also could force other aerospace defense companies to think about Bitcoin. The fact that you have now what is the largest defense company listing on the stock market that has Bitcoin in its balance sheet. Could this change the framing around it, reduce the risk that many large corporate treasurers think when they have but the risk of having Bitcoin on their balance sheet? So it could change the framing. And then finally, I think it creates a template for other companies when it comes to S1 disclosures, because they had to, obviously, as they're going through listing, they have to disclose Bitcoin on their balance sheet, and they have to explain why they have treasury assets within Bitcoin on their balance sheet. So that itself also creates a new standard for it. So that's all the positives that is for Bitcoin and the signaling of Bitcoin on the balance sheet. But I want to just come back to the point around SpaceX itself in terms of the IPO and the risks that could pose broadly to the crypto space. And that's mainly, and this is the downsides of it potentially, and that's just around the fact that you have in SpaceX this $2 trillion valuation coming to the market, raising $17 billion in the IPO, and that's just SpaceX coming to the market. You've got all these other large, AI companies coming to the market as well. OpenAI, a few months after that, close to $1 trillion valuation. Same thing with Anthropic. And this comes back to the concern that many people have had around the capital and attention being diluted, and essentially the competition that's taken away from cryptocurrency attention. And I think that's one risk that we do face here when it comes to all these massive IPOs. And we've seen it more recently in terms of, I think 2 weeks ago, there was this Cerebras IPO, and that has attracted a lot of attention. So while it's positive to see that we have a company coming to market with a Bitcoin on its balance sheet, and indeed one of the most preeminent companies of all time come into market through IPO, the IPO itself and the capital that's going to attract is also competing for capital from the potential crypto markets. And this is just an extension of the question many people have had around the AI trade taken away from the attention and capital for crypto that could potentially have impacted on the demand for crypto assets from investors, institutional and retail alike, over the past few months. So we'll have to see how it plays out. But I'm still glad to see that we have a SpaceX coming to market with the Bitcoin still on its balance sheet.
Let me now address another interesting issue. We recently saw that Donald Trump tweeted out a post where he's reinstating his support for the crypto industry, saying that he's very well committed in making the US the crypto capital of the world. And we saw that crypto markets did not react positively to that tweet, as it was expected, at least in the past. Even on the opposite, the crypto market crashed down even further. So a lot of people are asking now, have Trump's tweets lost their ability to influence the crypto markets?
Yeah, I think the crypto markets are dead to his tweets right now. Essentially has no impact. And yeah, I think that's just become because we've been desensitized to it. The biggest impact from the Trump pump came after, let's face it, his inauguration. Early before his inauguration, we saw a lot of the rally there. And indeed, on the back of his meme coin launch, that was, I think, peak, in terms of the impact of the Trump pump on crypto. And subsequent to that, there has been many isolated cases where he's talked about something, he's tweeted about something as it relates to crypto, to the crypto markets and crypto legislation that has had some isolated pumps. There was last year talk about the crypto strategic reserve when he mentioned particular altcoins within that, and they rallied, and Bitcoin also did rally off the back of that. But subsequent to that, I think Bitcoin and crypto has reacted more to movement in legislation. So we saw a big pump prior to and subsequent to the passing of the Genius Act last year. And that sustained itself for a few months until, of course, October. And that was on the back of positive developments for the long-term trajectory of cryptocurrency legislation, which was good. We similarly did see something earlier, I think about a month ago, when it came to the passing of the voting of the Clarity Act out of committee. And we saw Bitcoin rally towards its 200-day moving average, above 80K. But subsequently, it's retraced off of that 200-day moving average, as I mentioned. And as you'll know, yesterday, Trump tweeted, about the crypto capital of the world, about the importance of keeping Bitcoin, of being the crypto capital of the world, and what his administration has done for Bitcoin. And even like over the past month or two, his administration has teased out this strategic Bitcoin reserve, but the market just does not care. And indeed, I tweeted about it earlier. It's like the moment he put that post out about him being the most pro-crypto president and all of that, Bitcoin just fell and fell and fell. So the market just does not pay attention to what he says about crypto anymore, which is interesting because it seems like when he tweets about the stock markets, when he tweets about other companies, they rally. But when he tweets about crypto and Bitcoin, it's just like, oh, please stop. Please stop.
A lot of people are saying that the new Fed chairman is now faced with an impossible choice. He has to choose between cutting rates, which would push inflation even higher than it is now because of the crisis in Iran and the increasing price of fuel and so on. So that would be one bad scenario. And some people are saying that would break the US economy because interest rates are already super high, and it would make it very difficult for the US to service its debt, which is incredibly high already. So what is your look on this? How this dilemma is likely to play out according to you?
Yeah, I mean, I can't think of anyone who's got a more difficult job right now in the world than Mr. Kevin Warsh coming into this. I think like probably up there with like Alaskan and king crab fishing and coal mining is probably one of the most dangerous jobs, has been the Fed chair. Because honestly, talk about being in between a rock and a hard place. It's a very difficult situation to come in here. I think he came in with the explicit mandate from Trump to cut rates. And the market was even a few months ago pricing in interest rate cuts. And subsequent to the Iran war and the inflation we've seen starting to pick up, the market is now actually pricing in rate hikes. And many strategists are saying we could see rate hikes. And yeah, I think he's in a very difficult position because the problem with the current inflation we're facing is that it is supply side inflation. It's driven by cost push, and costs being energy prices and fuel, gas, and all these other things that feed into inflation. And as a result, the Fed can't do much about that. The Fed can't print more oil. They can print money, but they can't print oil. So as a result, there's not the you can't really. It's hard to stop that kind of inflation, and you then have to work on what you can do, and that's tamp down demand in the economy. So reduce demand side inflation, and therefore that means raising interest rates. And it is difficult to do that right now. As you mentioned, the debt sustainability issue is crazy. I mean, we're paying already the US is paying $1 trillion a year, and the CBO projects it could be by 2036, 2.1 trillion. So that's crazy. And the increase in the interest rate cost every year, like 0.1% increase in yield, increases the annual interest bill by about $30 billion. But the problem is, it's not necessarily what the Fed is doing on the short end of the curve. It's what the market is reacting to on the long end, and what's happening to 10-year rates, for example, are at 4.5%. And the market is pricing in higher inflation. They're pricing in a less conviction that the Fed is going to be able to slow this down. And I think the 30-year rates are now at their highest level since 2007. So I think that in this particular environment, I suppose that when Kevin Warsh comes in, he's going to have to think about raising rates. And I know that's going to come with the ire that Trump will bring, because he was supposed to be the dovish or the Fed chair that was going to cut rates and everything. But in this particular environment, if you keep on reducing rates when inflation is ticking up, that's like this running into some serious issues here around. If you think back to the 1970s, with that runaway inflation caused by then the price of oil again. So it's a very difficult situation he's in. I think that he's going to try other dynamics as well, and it's also important to point out that it's although it's the committee, it's the FOMC has to decide. So although Kevin Warsh has sway as the chairman, he can still decide to you have other members who have to vote on policy, and we've also got Jerome Powell, who's going to stick around as a governor there, so he's going to have an opinion on that as well. So that's the risk. There is potential upside risks as well, and that could be, for example, if we do see a very quick resolution to the war in Iran, and we start to see a deal formulating that opens up the straits and we get oil flowing again, prices could drop 20 to 30%, and hopefully this feeds down the supply chain, and we get gas and diesel prices lower, which could then therefore reduce the impact of cost push inflation. So that's one potential upside risk. But I think the worst case scenario is stagflation. And that's the combination of low growth and inflation, and that's 1970s nightmare scenario. So I think that's why there is a risk also with increasing rates, because if Kevin Warsh and the FOMC does decide to increase rates now, especially with questions around the K-shaped economy and people in the consumer being in the worst position they've been in for many years, that could dampen demand and lead to stagnation in the economy. You have a recession with high interest rates as well. So that's the toxic macroeconomic soup that Kevin Warsh is now have to deal with as the new Fed chair.
Now, just final question. I have to touch upon Ethereum. So just to close up the conversation, I wanted just to discuss Ethereum, because I know that the altcoin market has been in a stagnation for many months already. But Ethereum is now in the middle of a very tough discussion. It seems to be the latest crisis going on with Ethereum Foundation and so on. We saw that a very prominent voice in the Ethereum ecosystem, David Hoffman, announced he sold all his ETH, and that is a powerful signal to everybody else in the ecosystem. A lot of people are interpreting it as the ultimate bearish signal for ETH. What is your take on this?
Yeah, at first I thought that was a bit of a rage bait from bankless to ETHless. Yeah, it's crazy. I mean, so as I understand it, his argument is that he's bullish on the network, but bearish on the token itself, and the whole question of ETH value accrual. And I think the argument does have some structural merit to it. Essentially, if you think back to the whole argument of ETH as ultrasound money back post, I think it was post the merge, or 2020 to 2021. It was basically you'd have the fee burning, which would work and make ETH basically disinflationary or deflationary. And you'd have, and this basically was the argument behind holding ETH as the ultrasound money to Bitcoin sound money. So that has changed subsequent to that. We don't no longer have that burn over above the supply. So there's not that deflationary component. And then there's also the question of the value accrual right now. It's true that a lot of the value is now that L2s or layer 2s capture a lot of that economic value. And the layer 1 token being ETH captures less of that. So it's becoming, Ethereum itself and the ETH network is becoming more of a infrastructure that the others are monetizing. There is a counter argument, like ETH is a productive asset. You can earn some yield on it from staking yield, and it does have a differentiated use case beyond just thinking of it as money. It's not just a store of value, it's a yield-bearing asset. But yeah, currently right now, I think that the ETH-BTC ratio is also near 10-month lows. So it seems as if the market has repriced that and priced his view in already in terms of, at least as it relates to Bitcoin. So I guess the next question then is Tom Lee going to hodl? Or is he going to also rethink his thesis in terms of what happens with ETH? Because I think that's the only other real outstanding ETH bull that is still going strong.
Do you agree with David when he says that he doesn't see any big potential for price appreciation when it comes to ETH because of this tokenomics that you just described?
Yeah, I think at this current point, I think that ETH needs to think more broadly around how we can lead, where it can get more value accrual from the layer 2s. They need to rethink how those economics are shared. Otherwise, it is just going to serve as the infrastructure for other layer 2s and corpo chains and everything to monetize on top of, which is unfortunate, but that's just the way it seems to be right now.
All right. Well, I think we covered it all. Thanks a lot, Nick, again, for coming on our show. As always, it's a pleasure to have you.
Great being here, Giovanni.